You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the Flowmaster Schwartz from SOVO. The Option Block is brought to you by SOVO. When it comes to trading volatility, trust SOVO, the creator of the VIX Index, for in-depth and relevant information. SOVO's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody, that music means we are back once again for the Option Block, everyone's favorite. I know it's my favorite. Hopefully it's your favorite bi-weekly options show about all things options, a little bit of unusual activity, a little bit of what's trading, a little bit of education, a little bit of your questions, all rolled into one fun options package. My name, of course, Mark Longo from the THE optionsinsider.com, as well as from the network upon which so many of you are binging and mainlining and having all the fun these days. Hope you had a great weekend. We're kicking it off in high style. Going to be a little bit different. If I sound a little bit different, it's because we're having some connectivity issues here in downtown Chicago. So I'm still in the studio, but I have moved studio adjacent to a different location, not using our usual setup, which is why we're also not running the live right now. So we'll try to get the live back up and running for the other shows later this week. So if I sound a little bit different, not on the usual array. I'm actually running the show off Wi-Fi today, so fingers crossed, listeners. what we have going on out here should be funny. If you want to get access to not just this, but just saw the other day, 14 now pro Q&A sessions, similar number of options oddities. So you're talking 225 plus episodes of exclusive content for you cool guys and gals out there. theoptionsinsider.com/pro, the place to get all that, of course, giveaways, everything else we do over there on the fun side, theoptionsinsider.com/pro. Speaking of fun, we usually kick things off with a little bit of fun here, guessing some 80s wrestling. Most of you, 99.9% of you love it. Every once in a while, we get one person who writes in and says, I don't like 80s wrestling. Well, guess what? This is the show for you this week because we're not doing the 80s wrestling this week because, as I mentioned, different setup. And also because we are joined by not just the uncleist of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, how go things in the land of St. Charles, sir?
Internet is running nice and fast. We're a first-rate city, unlike that small town of Chicago.
Yeah, that small, low rent area we call Chi-Town down here. Can't get things up and running. And then we're also joined, speaking of a place that can't get things up and running, it is the shores, I should say, of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI, who, if you know nothing else about the Rock Lobster listeners, if you've tuned into a show or two in the past, you know his absolute strength in life is 80s wrestling. Is that not correct, sir?
Yes, it's a life skill, I believe. A life skill.
A life spent devoted to the squared circle, analyzing all the moves, all the best promos. He really has it down to a science. I'm glad to see you put your week off in the shores of Maine to good use, sir. What does one do in the hinterlands on a vacation? What were you up to? I heard tell that you were fishing. Is that the case?
Actually, it was too rainy, so I mostly just I walked. I walked all over southern Maine, basically. I saw all that. A couple of friends in town, and so we walked around and saw the sights like a tourista. It was quite nice. I never get to do it.
It's a long walk across southern Maine. I hope you had good walking shoes, sir.
I did. I had fine LL Bean walking boots.
All right. Well, I think you're legally required to rock the LL Beans in Maine. And we are legally required, listeners, to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where, surprise, you break down what the heck is trading out there. And as we're coming into the start of the trading week, there was a little concern, a little consternation out there heading into the old weekend. It seems like they were going to put a little bit of vol maybe back on. We were starting to see a little bit of red on the major indices, a little bit of green on the vol front. And now coming into Monday, we have an interesting combination because we have the vol products getting some of that weekend back, but also we have the major indices kind of gently drifting north to start the week. S&P up about almost 0.25%. The Dow up about exactly 0.25%. And the NASDAQ kind of playing the rare laggard role today, only up about 0.16 or so percent on the day. That means most of our vol friends, when we were kicking off the show, still had some of that weekend juice coming back in, but it's an open question as to how long that's going to hang around. Right before we kicked off the show, we had VIX right about 14 handle, up about nearly a point, actually about exactly a point from where it was on the Thursday show. VVIX at an 84, so that was literally unched from the Thursday show, so no change in vol there. VXX, our old friend, 2030, up about 0.2 of a point. We'll see if we can hold on to that or if that's going to give up some of the ghost there as well. I got a little bit of a VXX put fly in my back pocket, so we'll see if that one can give up some juice heading into the rest of the week. UVXY 13.25, up about a quarter on the week. SVIX 32.75, down about half a point. If you listen to Vol Views on Friday, that product was just at yet another new all-time high, 33.25, I think it was, somewhere along those lines. So that product continues. I think it actually got higher, didn't it? Maybe it got to 33.75. All I know is that the SEP 35s, the contract that was roundly mocked, not just by us on the show and on the network, but also by many of you listeners who wrote in saying, look, these SEP 35s are ridiculous. Who would put these on? They got within spitting distance, listeners. So I don't think anyone had that on their bingo cards when we first saw that trade go up many months ago. UVIX, the deal, piece of crap, remains a piece of crap, 270, literally on from the Thursday show. Apparently they want this thing to have a long, slow death. I don't know what they're doing out there at this point. And then Vol Q 1570, down a little over one, about 1.1 points from what it was at this time last week. Let's go around the horn the opposite of the way we started. Let's go out to the land where everybody, I hear the hot thing is just to walk the land, Mr. Rock Lobster. Everyone's out there just walking the earth in Maine. What's catching your eye as you take a hiatus from your sojourn, sir?
Yeah, we just walked the earth. We walked the planet. We've got we had that little bit of a sell-off last week, Mark. I was out. I didn't even look. I had no positions on really. I had a couple, actually, which was okay. I closed most of them on Thursday, luckily. I looked at it like, oh, wow, everything's kind of moving up. So, and then Friday we had that sell-off. It did not excite a whole lot of VIX action, although I believe we kind of, we clocked in at like a 1270-ish, which I think, I'm looking at my 2-year VIX chart. I think we had Friday was the low VIX print of 2023, or Thursday was. It was. And then it spent the rest of the day kind of going up a little bit. So, you had lows for all. It still feels like volatility wants to trend down. Realized vol's pretty low, and there's just no, if we didn't have this $1 trillion, which is kind of hard to believe, but we have a $1 trillion interest bill. Doesn't seem to bother anybody. Like, they somehow think, well, the Fed's just going to get rates back down to 2% again, and then the bill will be cut in half or whatever. Not bothering anybody yet, but it is, I believe, now in the unsustainable path category for spending. So, not bothering anybody. Certainly hasn't bothered the equity markets. However, I was trying to remember when our last line in the sand number was for SPY, and I now feel 4,500 is our that's the number where if you buy your SPY calls or whatever, like SPX is 4,500, you just get rid of them. Because like looking for a catalyst to the end of the year, the AI catalyst, I think you got long in the tooth. Those stocks did really well, but now they've all pulled back a little bit. So, and Apple came out with titanium. Okay. All right. Apple phone, whatever. I'm actually finally going to upgrade my 5E at some point because my phone's unusable now, but like all Apple can do is like titanium. I mean, golf club manufacturers had titanium like golf clubs, 20 years ago or something. So Apple's big thing is a titanium case. And I'm sure a longer battery life or some other dumb junk. Anyway, but not a lot of innovation coming out of them anymore for a huge multiple on earnings. So Apple's a little quiet, Nvidia's a little quiet. So there's a good reason for money to leave those and into other stocks. So from a vol point of view, most of the vol products are near their bottom, like the long vol products, and the short vol products are starting to creep back up to their highs again. So we do have the Fed, and I think the market is pretty much banking on the Fed not raising rates. On Wednesday, I believe the Fed funds rate or whatever that prognostication device is saying 0 chance of them raising. And at this point, I think, I don't know if raising rates more is really going to help. I think we still need more, a lot of the supply chain issues and all that kind of stuff. You could always just make more gas. But, and again, we have kind of a market just looking like 4,500. There is a period of time where just 4,500. The year has been pretty good. And that's kind of our stuck line in the sand. But maybe the perennial optimist has something a little happier to say about the market. Is he cautiously optimistic, or is he more go? I'm going to go buy some SPY calls.
Uncle Mike, you have been invoked, sir. Are you feeling the rays of sunshine, or is it time to get out? Look out below, sir.
I mean, even if it's time to get out, I always feel the rays of sunshine. Come on now. But in looking at this, so just to kind of add to what Andrew said, yes, there's reason to be out of Apple, but yet when you look at Apple, we're still hanging around the 180 mark in that Apple's up $4 on the day almost. And so, I mean, this is kind of almost feels like a throwback segment in that I remember back in the day when Mark would say mean things about me. They'd beat me up. They'd take my lunch money, all because I would say good things about Apple. And my response, whenever they would say something back in the old days about how Apple has this, that, and the other, I'd say, well, yeah, but it's Apple, and then it would go up, and it made for some great commentary on the show. And so today almost kind of feels the same way, where Andrew gives valid reasons for what he's saying, but my comeback to this right now would be, yeah, but it's Apple. And so, with that, Apple has had an amazing year this year, starting out the year in the 120s, making a run at 200, and it's back to the 180 levels. So, 4,500 does seem to be a line in the sand right now with the S&P, but in terms of Apple, no, it doesn't make sense that more debt and more money printing can be a good thing, but in this case, it almost is for Apple, and that we've pulled back from the highs of 198 roughly 2 months ago, and we're down at we got down to the 172 level that had a pretty firm floor, bouncing off of a peak that was put in August of 2022, and so we are kind of at a floor in Apple, and so or you could argue that. And with what Andrew is saying, it may have already been factored in. I mean, time will tell on this one, but it's one of those things to where history has proven you don't really want to mess with Apple by any means. Now, in terms of our government printing money and doing what they're doing and $1 trillion interest rates, I mean, Andrew, what's $1 trillion between friends? I mean, come on. What's the big deal there? But it is ridiculous the amount of debt we're in, and then that is a definite concern of things. But the only thing that I can keep coming back to on that, and me being the ray of sunshine on this show, is that we've been saying that for at least as long as I've been in the business. Debt continues to get worse, spending continues to become greater, yet markets continue to increase over time. So I think it's wise to not bet against the bull over time. But on here, of course, you do need to have some type of risk management in place. What's your plan in case the market actually does go down? So we do have those things, but I do think that there's a lot of reason to be optimistic for the reasons with which I just mentioned. On the day-to-day with the S&P itself today, we are up marginally on the day-to-day, nothing too crazy. A little bit of movement to the upside in the energy space, but nothing too crazy there. And we have a little bit of movement in the industrials and the technology front, a little bit of movement there as well. And that, other than that, there's really nothing to write home about in any other category. In terms of anything that's lighting up my tape today, Apple is the biggest thing that's lighting up my watch list or my holdings at this point in time. The fact that it is up roughly $4 on the day, it's a big part of the market, and that's what's lighting up my tape today in there. And so, with the Fed announcement coming up, I do think that that's going to be something that the macro market will be looking at, of course, and see where we're at with it. I'd like to see the Fed start to lower rates, but I'm not the Fed, and the Fed won't really look so good if they start lowering rates at this point, so I don't think it's going to happen, but I do think it should. And that is what I'm seeing today.
All right, let's see what we're seeing out there in the rest of the market, listeners. Is it a banger day in the indexes and the single names? Let's find out together, shall we? First, off to the indexes we go. Let's kick things off in the VIX. So, if you looked at VIX right now, you'd say, it's not a terrible day. It's not maybe quite the sleepy day you're seeing in some of the other names out there. 400,000 contracts on the tape right now. It's actually a pretty robust start to the week and indeed start to the day, especially when you consider the ADV has eroded down to about 609,000 contracts out there. So that's down almost 150,000 contracts from the banger days of the dog days of summer. And saying that out loud, still I find that shocking. The numbers we put up in August, but we've talked about that already, listeners. SPY, 4 million exactly. SPY, if you know anything about SPY, you know 4 million right now. That's not bad, but it's a little light. You might see 4.3, maybe 4.5 if we're doing a little bit more paper out there. Maybe even more. We've seen over 5 recently this time of day. So it's 4. I mean, it takes not much. A light breeze is going to drive a million plus contracts in SPY. So 4 million, that's where we're hanging out right now, listeners. The ADV 8.15 out there in SPY land. The S 1.45 million. Again, same deal. A year ago, amazing. So much paper. Stunning how much paper that would be this time of day in the S. These days, with 0 day on there, we expect it to be at least 1.5 million. That's pretty much right along the lines of where it is. The ADV 2.93 million. So again, still managing to threaten 3 million contracts a day in the S. A good chunk of that thanks to the, shall we say, rapid adoption of all things 0 day out there. We'll get to the results of our question of the week about that fun a little bit later in the show, listeners. Small caps, IWM, 306,000 contracts on the tape right now. Let's check in with our old friends, small caps, see how they're looking right now. IWM is off about 1/3% right now on the day. So IWM bucking the trend, saying no love for small caps today. The ADV 840. So that's still pretty robust. It's not quite the 1 million plus it was not too long ago, but 840 for small caps, all things considered. That's a pretty lofty level. They don't seem like they're on trajectory to hit it today, but then again, the session is young and the Qs, even on a relatively quiet day, net movement wise in the Qs, they're managing to put up some numbers. Exactly 2 million contracts on the tape right now in Qs land. That ADV 3.7 million out there, so they definitely seem like they're on pace to hit their number today. Let's get out to the single names. You know, is it a banger day for single names? Are we putting up tons of paper in all the stocks you know and love? And the answer is not really. Kind of depends where you look. If I looked at this again and saw these numbers, especially the bottom half of the top 10, I might say, okay, we're hanging out in probably mid-August right now. These are the kinds of numbers you expect, you know, mid-August heading into the dog days of summer. 146,000 contracts is what it cost you to break into the top 10 today. So that's not a heck of a lot. Listen, that's kind of our bare minimum for a functional day out there in the markets right now. That gets you to our old friend Microsoft. Microsoft managing to buck the little bit of green trend we're seeing out there today. 328.59, off about $1.63, about 0.5% on the day today. Looks like they had a range of about 330 and almost a half, 330.40 to the upside, and the downside was 326.85. So they have done a fair amount of living. We're hanging out right in kind of the middle of that range right now, listeners. And again, good for a paltry 146,000. Usually that's going to kick you down to like number 20 on our most active list. Instead, today it's good for the number 10 spot. You made it in. Only 146,000 contracts. A low limbo bar for folks out there today, listeners. Number 9, we're going back from Softy to the former. Are they still the reigning king of the apes? I guess that's a subjective question. That gets us to our old friend AMC, $7.83, off about 53 cents, or about 6.33% today. So they're coming for the meme names today, at least for AMC today as well. Looks like range-wise, it got down to about $7.70, and the high was $8.32. So we're kind of hanging out near the low end of that range right now, listeners. And again, good for the number 9 spot today, and 148,000 contracts on the tape. Number 8, we used to joke about this name. We said, if this name was in the top 10, then clearly it's a snoozer out there in the options market. And then what happened, listeners? Oh, this whole little AI wave hit the market, and this name was suddenly catapulted to the vanguard of the AI wave, along NVIDIA and a few other names. And all of a sudden, bam, off to the races. We're seeing them in the top 10 all the time. And they're back again today. Number 8, GOOGL, a.k.a. Alphabet Class A, 183,000 contracts on the tape today, trading 138.12, up about 72 cents, or about 0.5%. So a nice little pop for them today. They've had a decent range, low 136.61, the high 139.16. So they're about $1 off their high from the day right now, but still rallying, still up about $0.75 out there today. So a nice little day for good old Google. Number 7. This one's a frequent offender these days, listeners. The artist formerly known as Facebook. It is Meta, coming in at number 7. 189,000. Again, we're all the way at number 7. We haven't even broken 200K yet, listeners. So it's one of those days. Not exactly, shall we say, a rock'em sock'em robots day out there. Meta right now hanging out right around 302, up about $1.65 today, about 0.5%. The high today, 303.60. So they rallied it up a little bit today. The low, 297.80. And again, we're hanging out towards the upper end of that range, but have retreated off it about $1.60 right now. And again, good for the number 7 spot, 189,000 contracts. Number 6, this one, an intriguing one. We were just talking about this a couple of weeks ago on our question of the week. We had effectively one of our death polls. Put a gun to your head. You got to buy either Oatly or NKLA. They were both trading around $1.20 at the time. And I do believe the lion's share of you, somewhere around 53%, I believe, chose Oatly. So you were all in on the oat milk. Not as much love for NKLA. We saw the stock get hammered last week, got down to 80 odd cents over the course of the past week. Apparently, that narrative is changing right now, listeners. NKLA coming in at number 6 today, 274,000 contracts out there on the tape. So a banger day for them. They're trading $1.56 or 37 cents. So they have nearly doubled from that nadir they were floating around on the Thursday, Friday timeframe of last week. Apparently, they appointed a new COO. So that's going to be it. That's the thing that's going to carry them into the stratosphere. Maybe she can really make the trains run on time out there, listeners. Who knows? But they're looking for, I guess you're looking for any life raft you can right there. Any life preserver you can get tossed your way if you're a NKLA bull. And they're seizing on this today. Hard to blame them out there. So stock having a nice little pop. Maybe if you were in it down there, we were joking about that on Options Oddities with our buddy Mr. Matt last week. At this point, 80 odd cents is the options even worth talking about. Is the stock the option? So intriguing stuff. That was a good episode. If you missed Options Oddities, if you're not on the pro side, listeners, theoptionsinsider.com/pro. Bit of a banger episode this week. It was really fun. So check that one out as we keep on rolling here to the number 5 spot, halfway through our countdown, listeners. And we're still only at 278,000 contracts. That gets us to the Amazonians today. So again, one of those kind of sleepy days. The Amazonians, 139, double off about 84 cents today. Right now, looks like they had a range of about 141 and 3/4 on the upside, the low 139.30 out there. So we're hanging out close to that low of the day right now, listeners. And again, good for number 5, 278,000 contracts. And since the A-related tech names like to cluster together these days, let's go to AMD next. Why not? Number 4, 323,000, all the way to number 4, listeners, before we break the 300K level. Some of our banger days we've seen out there, we start at 350,000 contracts in our countdown. So again, kind of showing you what an anemic day it is, at least on the single name front. AMD, number 4, listeners, the chip zone coming late today. 102.60 is where it's trading right now, up about $1.10. They took it down to about 99.45 earlier this morning. They got as high as 102.99. So AMD hanging out near the upper portion of their range. Good for 323,000 contracts. And the number 4 overall spot. Number 3, listeners, you can probably guess if AMD was number 4, hot on his heels going to be its stalwart companion there in the chip zone. NVIDIA, number 3. This is where I said it was kind of a funky list this week, because we jumped from number 4, 323,000 contracts, to number 3, 807,000 contracts. Talking almost 500,000 contract difference. That's why I said it was bottom half and top half. 2 very different stories here this week, listeners. NVIDIA, 440.14, up about $1.14. So we've seen NVIDIA have crazier net days, but the low today was 420. So it has rallied about 22 handles. Got up to 442.42. So it almost rallied 22 and a half handles before settling out right now at 440. So hence the banger amount of paper on the tape there for NVIDIA today. Number 3. Number 2, Uncle Mike was just talking about this name, another A-named tech company. It's the fruit company. The old Apple, listeners, good for number 2, 937,000 contracts. Up about, just ticked, up $4.10, trading 179.11 right now, up about 2.3% today. The low, 176.17. The high, pretty much right now, 179.18, pretty darn close to it. So rallied 3 points on the day. And unlike a lot of other names, hanging out near the top of that range. So apparently the Rock Lobster mocked it, but titanium driving us to new all-time highs. It's a crazy commercial that is put out with the asteroid crashing through space into Earth. There's a long way to go to sell a titanium case, but apparently it's working. Number 2, 937,000 contracts. And the number 1 all-star out there today, listeners, you know what it is. It's Tesla, 1.15 million. Tesla taking a bit of a breather today, off almost 7.5 handles, about 2.75%. All that love, that upside that came from their supercomputer in Morgan Stanley recently. Apparently that's coming off the other way now. 267.61 out there today. So you had Morgan heaping praise on them last week. Goldman slashing their earnings forecast today. This is why we take a dim view of analysts here on the network, listeners. But intriguing stuff, good for the number 1 spot out there. 1.15 million contracts. In terms of earnings, it's kind of light there now, listeners. We have seen most of the bangers you've come to know and expect have popped off by now, but still some names on the radar out there. I mean, everyone's excited for Steelcase after the bell on Tuesday. Am I right? Wednesday, of course, we have General Mills before the bell, and then we have KB Homes and FedEx after the bell. Thursday, don't tell the meatball, Darden Restaurants, his favorite name of all time, popping off before the bell this Thursday. So still some names to be found out there if you're willing to look. And luckily for you listeners, because we like you, we were willing to run the earnings move results, and earnings season reports for you. Let's look at a couple right now. Let's go out to FedEx. They're popping off on the 20th after the bell. And they were trading at the time we ran this report $2.54, pretty much even. They were pricing in $12.48. In the past, they've moved $12.95. So about half a buck less juice there in FedEx. Is that merited? Have we solved a lot of the logistical hurdles that have been plaguing the economy, or are there more on the horizon? Half a buck less worth of juice in FedEx, listeners. That's up to you whether you think that's merited or not. KB Homes, we've also got after the bell on the 20th, trading $47.80 when we ran this report. They were pricing in $3.12. In the past, they've moved $2.66. So fair amount of extra juice there as well. A lot of juice in a home builder. Is that merited, listeners? Again, up to you. And then we go out to the 21st before the bell to the meatball's favorite. Don't tell them we talked about it. It's Darden Restaurants, ticker symbol DRI. You know them. You love them. Perhaps you hate them like the meatball. Maybe you love their food. Hey, to each their own. 150 pretty much even is where they were trading on the time we ran the report. They were pricing in $6.44, listeners. In the past, they've moved $5.07. That's a fair amount of extra juice they are pricing into this announcement. What is cooking? What is up out there in Darden Restaurants, listeners? Might merit a closer look on that one. Again, don't tell the meatball. And right now, listeners, as we're winding down the season, running the numbers here, updating everything, the season report hanging out exactly par, exactly even, 100% for our earnings move season report here. The banger week was week 1, 154%. Remember I said back then, we're not going to be able to sustain that. And that, of course, was the case. Week 2, 103%. Week 3, 104%. Then we fall off a little bit. Week 4, 87%. Week 5, 88%. And then we tied it all up with a bow. Week 6, 92%. That's the cycle that we track for the season, listeners. Average all that out. You come out with exactly 100%. Slightly above, 2 points above our long-term average right now of 98%. Does it surprise you that we kind of came out net even on the cycle? A lot of people were predicting a pretty dire cycle for earnings, listeners. Does it surprise you that didn't come to pass? I'm curious. Hit us up. Let us know, because now it's time for us to let you know what we're keeping an eye on. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild. Occasionally, we get a little whimsical, and we always, I don't care what's going on, we always unleash the beast that is the Eye of Sauron and see what it can fixate its dark and fiery gaze upon today. Because the Eye of Sauron, it's unrelenting. It's always watching. It's always scanning. It doesn't care what you have going on in your personal life. It doesn't care what drama you have. Doesn't care what's going on with the name and who stepped down, what CFO. Doesn't care about any of that. It's just always hungry for the paper for you folks. Listen, it's an unrelenting beast. We built it that way for a reason, just for you folks out there. Because you folks, at the end of the day, the audience, you're an unrelenting beast in and of yourself, always hungry for more content. Luckily, the Eye of Sauron is there to help you out. Let's go out today to, if this is not a newcomer, it's not a name we have talked about in quite some time. This is Nutrien Limited, ticker symbol NTR, trading $62.83 right now, off $1.20 or nearly 2% today. This is a Canadian fertilizer company based out of Saskatoon, Saskatchewan. My favorite place. Say that one 5 times fast out there. Listen, I do believe we have talked about this, but I think it has been a wee bit out there since we've chatted about all things Nutrien. In terms of years, it hasn't been the best year for Nutrien either. It's off almost 27 handles right now, or about exactly 30% on the year. So a bit of a rough year. It started off the year, let's see, about $90, listeners. It hit a high shortly thereafter of $91.42. And then they started coming for it, listeners. Just started driving it down. I hit a low of $52.23. That was on June 1st. So again, kind of a little bit of tale of two charts here, listeners. It bottomed out for the year on June 1st at $52.23. So if you want to look glass half full, since then, it's up pretty much about $10, a little more than that now. They drove it up to 67 on August 1st and then back down a little bit, but still net up to where it is right now, $62.83. So an intriguing year out there. Let's see, what did our Eye of Sauron find for you folks out there today, listeners? They found someone, looks like, drawing a bit of a line in the sand here, saying this far and no farther. And if you dare to go farther, I will take that stock, please, because they came out and blasted away at 3,675 of the OC 59 puts. These are in the weekly expiration cycle, expiring on the 27th. So they went a little bit farther out, listeners. They sold these for the old 5/8. Don't see that too much anymore. Kind of a blast from the past there. Let's see, that's about a 28 vol, listeners. And they kind of hit these right off the bid out there. The stock was $63.84 at the time. So the stock has come in $1 since they sold these this morning. So that's going to be a little bit of an ouchie there. I know the Rock Lobster is not going to like that. They have failed his first sniff test. Interestingly enough, they extended these puts about as far as they could go without going through earnings, because earnings are going to be on November 1st. So they said, we want to get a little bit more time, a little bit more premium for these, but we ain't going through that crazy earnings time frame. We're not going over that waterfall, over that cliff, listeners. So they pushed it as far as they could without getting earnings. And that results in the OC 59 puts expiring on the 27th for the old 62.5 cents. Mr. Rock Lobster, does that price level warm the cockles of the old heart? Does it bring back old memories? Or is it like Vietnam? Is it a painful flashback for you? And then B, what do you think of this particular line in the sand and everyone's new favorite, Nutrien Limited, sir?
Well, I would have to say it would warm the cockles of my heart if the market was like 3/8, 5/8, 37.
Yeah, you're not getting that.
No, we didn't get them. But 62.5, I guess we got to take what we can get in this digital age. So, I think this is a good line in the sand style put. I think, I'm long some Scott's Miracle Grow from like 70-ish, I think, or $68. It's like trading mid 50s. Like, oh, I thought, wow, this was like a pretty good deal. So they kind of have, so you got inflation and all this demand for food, yet fertilizer prices are down. So I'm like, again, confusing. I thought it was kind of like a good time to buy these stocks. So I haven't sold them. I'll probably add a little more just because it's more commodity stuff. But yeah, it appears that this person is looking for, 59 bucks is not the low, but it's pretty low. So I don't think it's a decent trade, but I have to say it's like, at least for right now, these are still falling knives, and I haven't added to any positions, and I'm glad I'm stopped with some puts on a couple. But they're so far, again, they are bold but not correct yet.
Not correct yet, indeed, listener. Let's see. By the way, who else would be excited about a fertilizer stock but the rock lobster? So that's what gets your cockles warm and get your heart pumping, sir. A little bit of the old. Everyone else likes tech and AI, all this other crazy stuff. You, Mr. Rock Lobster, you get excited for a fertilizer stock. That's the kind of guy you are, sir.
Well, the dividends excite me.
Yes. You
when you're looking at 4, 5, 6, 7% dividends, I'm like, well, I could get excited about, sometimes the trading's fun, but you take your trading dollars and you go buy dividend paying stocks and growth stocks, and even stocks. I still own a little Apple, and I would agree with TOSAW. Like right now, these stocks aren't going up and Apple ain't going down. So I ain't buying any more fertilizer stocks, and I ain't selling the last of my Apple. So there we go on that.
There you go, listeners. Sexy dividends in fertilizer stocks. That's what we're hitting on today. That's what the whole show's about, listeners. Except for this next name. We're going away from fertilizer, and into the realm of pizza, listener. Let's see if this can equally excite the rock lobster out there. We're going out to Papa John's. I haven't talked about them in a little bit, listeners. Ticker symbol pizza, PZZA, pizza. That would actually be Little Caesars, but it sounds fun nonetheless. $76, pretty much even is where they're trading right now, off about 83 cents or a little over 1%. Today on the year, let's see what's up with our friends. Pizza. If we go out a year here, and on the year, they're kind of been treading water. They're off not even a buck, 81 cents on the year as well. So yeah, they were trading about this level a year ago, 76 3/4, and they net on the year have done a whole heck of a lot of nothing. They hit their high for the year, looks like on February 15th. So when most of the market topped out around February 2nd or so, they hung out for a couple more weeks before finally hitting their apex at almost 100, 97.78. Since then, it has not looked great for pizza. Even though I guess another one you could kind of, if you wanted to split hairs here a little bit, you could say in the last few months it has done a little bit better because they crushed it down to the low for the year of 68 3/4 back on June 6th. So it is above that. Actually, 66 looks like in 3/4, listeners. So it is above that level. So glass half full type of view, listeners. They have rallied it net nearly $10 from that nadir. They actually hit it higher. They got it up to about 85.5 on July 26th. So again, glass half empty. You could say, well, they're back down about $10 from that high just a couple of months ago too. So again, you could parse this chart in many different ways, but net they're almost literally unched on the year. So an intriguing name out here. Let's see what our eye of Sauron found out here. Listen, it looks like today is a line in the sand put day. Sometimes you see these trends out there in the market, and it isn't a banger day in single names out there anyway. Hard to find some intriguing paper. And what we are seeing, listeners, there's a whole bunch of line in the sand puts. Someone today likes good old pizza, and they like the 97.5 puts to the tune of selling 67.5 puts. They like the 67.5 puts to the tune of 3,373, blasting away at them for $1.30. This is about a 36 vol when they sold these, listeners. The stock at the time, a little bit lower actually, so they're getting the reverse move of our previous name. So the Rock Lobster might like these more. The stock was about 75 1/4 when they sold these puts. The stock has rallied. It's threatening $76 right now. So that first move is looking favorable for them. They also, let's see, now these people had a little bit more of the courage of their convictions. They said earnings be damned, which are on the 2nd. We are writing these all the way through expiration in November. So they didn't play any fun games going out to the last weekly in October or anything like that. They said, you know what? We want all that earnings juice. Maybe, dare I say it, they actually want the stock, listeners. We shall see, because maybe they'll be getting it. But right now, this put is looking pretty good. Mr. Rock Lobster, we got a tale of two line in the sand puts. What do you think of these pizza puts? And then, gun to your head, if you had to sell one of these, which one are you going for, sir?
I think the pizza puts, that is Papa John's. It's not the other pizza, Little Caesars.
No, it just sounds fun to say pizza.
You're claiming executive privilege as the benevolent dictator of said option.
They don't call me the benevolent dictator for nothing. You know, I'm out of my usual facilities, sir. Let me have what fun I can on today.
Let me play in my sandbox as I will. So, yeah, I think this Papa John's is definitely like turnaround project. So, I mean, just from a yield line in the sand point of view, again, it's not like 1% would be 60. So you get 2% in November. This actually isn't a bad line in the sand put on like my basic metric. Yeah, and it is kind of covering the lows of the last maybe 2 years. So, yeah, Papa John's has, as I recall, like maybe 5 years. Yeah, 5 years ago. Yeah, it was like 30. It definitely had some troubles. Yeah, I think this is a pretty good, it's actually pretty decent pizza. But yeah, I don't think this is a bad put sale. On the face of it, I would probably like the NTR ones better because I think this is a scoop on those fertilizer stocks. However, I mean, if we're going to go under the TOSAW test, or the regular test, the pizza is definitely at least even on day one and not getting slapped. So I would say the pizza one is definitely working better. The fertilizer stocks are money still seems to be coming out of that part of the market. Just you can't ignore it.
No, indeed, and you can't ignore your first blush test, sir. If it's moving your way, the stock on the first day, you are legally obligated, I think, to pick that one. You have to. It is required. It is part of the Rock Lobster brand at this point, sir.
That is correct.
Speaking of brands, let's finish up here and let's flip the script a little bit. Enough. These line in the sand puts are fun. And they do tend to work out quite a bit, listeners, which is why we talk about them so much. It's also what the majority of the paper that is going up out there today is. We don't dictate this. The market gives us what it wants to give us, listeners. But we like to look. We know sometimes a little bit of upside call action is what gets your heart pumping, your blood pumping out there at the end of the day. So let's end things off here on a newcomer. This is SOVO Brands Inc. Ticker symbol SOVO, SOVO. Trading 22.62 off about 2 cents today. This one, if you're not familiar, listeners, is a consumer packaged food company focused on acquiring and building disruptive growth brands that bring today's consumers great tasting food that fits the way they live. Man, that's a mouthful. I wonder how long they worked with their marketing firm on crafting that specific descriptive sentence. But there you go. That's your SOVO's brands. And it's funny they mention acquiring brands because looks like Campbell Soup is in the hunt to acquire them, listeners. So we have a little bit of corporate action going on this name as well. Let's see. On the year, listeners, a year ago, this stock was looking a lot lower, 14.61. I'm guessing a good chunk of this rally we've seen is obviously because of this acquisition target here. It was trading 14.61 a year ago, and it kind of hung out. I mean, it's a sleepy kind of packaged food company, listeners. So by March of this year, it was actually down. It was trading 13.18. Then they slowly started to build, and they built. So when the rest of the market was selling off for contagion fears, this packaged food name was starting to rally. They rallied it up to 17 and a half bucks on April 13th. And then they kept rallying by June 30th, got up to nearly 20 bucks, 19 and a half. Then they started giving up the ghost list, and they got back down to 18 bucks on August 3rd. And that's when Campbell's Food struck. They said, we shall acquire us a little bit of these old tasty brands SOVO Brands has, because the stock popped from 18 bucks pretty much even to pretty much where it's hanging out right now, right around 22 and a half, 22.60 out there. So that's clearly near where the takeover level is out there, listeners, which is intriguing. The paper we're seeing out there today as a result. Usually you see this and you think, oh, this is maybe a little bit crazy flyer. This also could be somebody doing a little bit of deal arb and protecting themselves against an adverse movement, because someone came in this morning and scooped 3,000 of the NOVE 25s, just lifted the offer straight up, paid 15 cents. I said we're hanging out right around 22 half, about 22.60, listeners. So this is a fair ways out of the money call here. Got to move $2.50 for these bad boys to become relevant. The stock was right here when this trade went up, 22 vol. There are earnings, so you're actually getting earnings in this. Earnings are on November 8th, so you're getting a fair amount of time and an earnings announcement between now and expiration. So you're not getting nothing for your 15 cents. You also need a heck of a banger move in the stock to really have this thing pay off. And now that it's locked up in this deal, it hasn't really shown that. So again, it could be someone just hedging their bets in case this thing decides to pop. Maybe they get some sort of additional bid. This name becomes in play again, something along those lines. These calls will protect you and or profit from that. Mr. Rock Lobster, sir, what are your thoughts on someone picking up a little bit of the old November upside in your new favorite, SOVO Brands Inc.?
This is the Rouse tomato sauce, Rouse pasta sauce. I believe SOVO's.
Perhaps. I don't know. I know they make delicious consumer packaged food and build disruptive growth brands. I'm not sure which brands are within that umbrella, sir.
Yes, it is Rouse, of the famous restaurant that the Rat Packers used to hang out with in New York City.
It says Rouse Homemade here. So there you go. Yeah, there you go. I guess you get some fun sauce up there in the shores of Maine, sir.
Every once in a while. Right now, this was a weird one because the deal is done. I was kind of wondering if somebody's looking for another bid. Maybe another giant packaged food company will try to buy. We'll try to scoop them. So it could risk arb, something like that. But depending on the deal. Actually, Mark was trying to work out the deal price today to see if they're actually trying to really pay up for what's going on. So I found it interesting nonetheless on that one.
This one had the same feel to me. It's probably a risk arb protection, but it does have the whiff or the air of someone maybe wondering if another suitor is going to come sniffing around. So it makes it kind of interesting. You're right. I wanted to go dig in and see what the deal price is as well. So this one, at the very least, listeners, merits further investigation. And you know what always merits further investigation? It's the strategy block. So let's get to it.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. It's the portion of the show where Uncle Mike comes on down from the mountains, stone tablets, bubble pipe in hand, to dispense some options, wit, and or wisdom. Uncle Mike, which do you have in store for us today, wit or wisdom, sir?
I think I want to go with wisdom today.
I like it.
Over the course of the last few weeks, I've been really giving a lot of love to diagonals and horizontals. I want to give some love to verticals today as well. And the reason I say that is that, yes, volatility is lower right now than it has been over the past few months, but it's still not necessarily a bad time to do a vertical, depending on your sentiment on the stock, as well as the individual stock itself. So just because one market condition might favor one strategy over the other doesn't mean you need to abandon the other one. And so today I want to talk about strike price selections with vertical call spreads. Now, first thing you can do to think about in terms of should you go in the money, at the money, or out of the money, there's no right or wrong answer. It just simply depends on what you want the spread to do for you. let's say that you want this spread to be as similar to a covered call as possible, an out-of-the-money covered call as possible. Well, one thing you can do is you can buy a deep in the money long call, and what that can do is that can replace the stock. Now, when I say deep in the money, the deeper the better in terms of how similar you want to act to the stock. Now, at some stage, if you're at a 99 delta call and you keep buying more and more and more and go deeper in the money to get more and more 99 delta calls, it probably doesn't make sense. So the furthest you should probably go with this thought is the first level of 99, and that's even on the very high end, quite honestly. I don't think I would ever go that deep, but that's about as deep as you want to go. Now, in terms of the short call, you can sell something in the money, at the money, or out of the money. Let's say that you want to take advantage of the high at the money premium of a stock. Well, you can sell an at the money call, and that'll behave similar to that of a stock with a covered call on it, in that if the stock stays the same, then you will benefit from the time premium that you sold at the money, and that would be where your trade could get some benefit. Of course, if the stock goes higher, the stock will get called away, and you'll get assigned on the long call and the short call, and they'll cancel each other out. And if the stock were to go lower, then you have the risk of the amount of money you paid for the long call minus the at the money call that you sold. Now, let's say that you want to have it more along the lines of a swing trade. Well, then, and you're willing to pay a little bit of time decay, but you don't want to pay a ton of time decay because you don't think the stock's going to double or have any type of major crazy move. Well, if that's the case, then maybe you want to buy the at the money call and maybe sell something a little bit out of the money. Now, as you're doing this, I would recommend having an understanding of how the deltas and the gammas work on this, because sometimes the stock goes up to the short strike price. People think, oh, I made my maximum profit on it. Time to get out. No, not yet. You still got another month to go with your until expiration, let's say. And if that's the case with the time decay that's still in the short call, you're not going to be at your full profit. And then at that stage, it just kind of shifts from a directional trade to more of a time decay trade. Now, should you get out of it at that point in time? That's a decision you need to make before you actually get into it. Now, the final strike price selection, let's say you wanted to go out of the money, meaning you buy an out of the money call and you sell an out of the money, and even further out of the money call. Well, what that's going to do is have a similar effect to just buying an out of the money call option, just for not as much money and not as much gamma. Same concept holds true with this out of the money idea, in that if the stock goes higher and makes it all the way to your short strike price, you're still going to have to wait until you get your full potential profit on the trade itself. And most of the time when I enter an at the money call spread or an out of the money call spread, I'm not looking to get a maximum profit on it. I'm looking to get whatever profit I'm looking to get from it. And so when I get there, which would usually be around the situations I just explained, that's usually when I get out. So there you have it for strike price selection on long vertical call spreads. Back to you, Mark.
Thank you for that, Uncle Mike. And now it is time, listeners, for the segment I know many of you have been dreading because it means the end of the show. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on for the rest of this week. And, you know, there might be a little thing on the horizon called the Fed. I'm not sure if anyone's really paying attention. Mr. Rock Lobster, you're paying attention to a little thing called the Fed. I mean, who really cares at the end of the day? And what else, if anything, is on your horizon?
Well, yeah, I am paying attention. It is possible that the Fed does its Fed thing. So it'll be Wednesday. Everybody's expecting rates being flat. And I just, you know, if they're not raising anymore and, you know, we have a deadlocked Congress, I think ultimately that's better for the future. Still haven't figured out why they can't get spending back down to pre-COVID levels. But of course, you know, I'm not a politician or advanced human being, so I can't understand that. So anyway, that's what I'm looking for. I don't expect a lot of action till then. So that's basically what I have on my radar screen. But let's see if we could tickle this 12 handle in VIX again after Wednesday.
Can we tickle that 12 handle indeed? Right now, the market, if you look at the FedWatch listeners, CME Group FedWatch, just type that into your browser of choice. I'm not sure if I've ever seen it this certain before. 99% probability that the Fed's going to sit on their hands. Only a 1% chance are they pricing in that we get anything, and that's only a modest quarter point hike out there. So wow, I've been watching FedWatch for a while. Only 1%. That's a fair amount of certainty, which of course means they're going to blow everyone's minds and they're going to raise it half a point or something insane. But that's a lot of certainty. Uncle Mike, what are your thoughts on this whole Fed thing? Do you agree with our FedWatch friends here that we're going to be sitting on our hands this week? And then B, what else is on your radar for the rest of the week?
Yeah, I agree. I think we are going to be sitting on our hands this week. I'd like to go down, but as I've said before, that's not going to happen. In terms of what's on my radar, I mean, it's the Fed. That's the big one this week. I think we're going to get minimal movement in the markets over the course of the next 48 hours until the Fed comes on and all the CNBC commentators get on those 8 boxes on the screen and argue with each other. And that's what I'm looking for this week.
Unfortunately, that's all the time we have this week, so we're not looking for anything else here on the show. But before we go, let's go back around the horn one more time. Let's go out to the rockingest of lobsters first. Mr. Rock Lobster, sir, where should folks go if they want more rock lobster goodness in their lives?
Well, you can go to optionpit.com. And again, any service there, 10% off. You go to Money Map Preps, which I think for this year, I have the best track record for anybody with 50 trades or more there. So that's not a bad thing to be number one for actually doing a bunch of trades. So either place. So things are going pretty well even after my vacation. So if you are interested in learning how to trade this vol stuff with index stuff and learning how to hedge positions and trade from a position of strength, come on over to optionpit.com and we are happy to teach you how to do that.
Trade from a position of strength. I like that.
Yeah.
Working on the old marketing over there, Mr. Rock Lobster. I like it. Check them out over there. Optionpit.com, the place to go to learn more. Mr. Uncle Mike, sir, where should they go if they want maybe a dose of 80s wrestling, because they didn't get that on the show today, or maybe someone to, I don't know, also maybe help manage their money? Where should they go with you?
You know, I don't drink coffee, so without the excitement of the 80s wrestling trivia, I'm kind of tired on the day, I got to admit.
We didn't get our banger kickoff to the week this week. Maybe we'll throw, it's going to be hard with the Flow Master. So we'll see, but we'll probably have to wait till next Monday again.
Yeah, he's a diehard wrestling fan, though, I'm sure. But anyway, follow me on Twitter at Mike TOSAW, TOSAW, or check out my website, stcharleswealth.com.
There you go, listeners. That is going to do it for us on the old OB. Back in a little bit with our good buddy, Mr. Bill, to break down all the fun going on in the world of crypto. Stay tuned for that. We'll see. We'll do some behind-the-scenes machinations here to see if we can get everything up and running again in the old studio. And then, of course, back again throughout the rest of the week with our usual array of content until we meet again here with the Flow Master on Thursday. Another episode of the Option Block. Stay safe out there.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.